Welcome to another episode of 3-Minute Digest. In this video, I explain which cash flow method is more informative. There are two cash flow reporting methods, the direct method and the indirect method. The fundamental difference between the two is how we report cash flows from operations. On the screen, we have Qantas Airlines cash flow statement from its 2022 annual report. On the left-hand side, we have the direct method. On the right-hand side, we have the indirect method. In the direct method, a firm or a reporting entity reports the sources of cash and the uses of its cash in operations directly. That is, here, Qantas reported how much cash it received from its customers, how much cash it paid to its suppliers and employees for salaries, how much cash it paid to employees for redundancies, interest it received, interest it paid, and income taxes paid, so on. So the net cash flow from operations was $2,670,000,000. That means cash inflows were greater than cash outflows. In the indirect method, we start with the profit or loss as per the profit or loss statement. We call it here, Qantas is saying statutory loss for the year. So this is the starting point. So this is basically the net loss as reported in the profit or loss statement. So it had a loss of $860 million. Now this profit or loss is adjusted for non-cash expenses such as depreciation and amortization and impairment of assets, and it is also adjusted for other gains and losses which are non-cash, and then adjusted for non-cash current assets and current liabilities. So the current asset items here are receivables, inventories, other assets, and the liabilities, current liabilities, are payables, revenues received in advance, provisions, deferred tax assets or liabilities. In the end, the net cash inflow is the same. So the net cash inflow in the indirect method is also $2,670,000,000. So which method is more informative? Research evidence suggests that the direct method is more informative than the indirect method. In particular, when it comes to forecasting future cash flows, cash flow components reported under the direct method are collectively superior in predicting future cash flows compared to earnings or accruals. Moreover, operating cash flow components and accrual components predict future cash flows better than earnings or aggregate operating cash flows and accruals. So the bottom line is the direct method is more informative than the indirect method. If you'd like to explore these issues further, here are two useful resources. Thanks for watching. Please like, share, and subscribe.